Now let's do one practical questions. Transaction number 1. A starts business with cash rupees 5,000. Transaction number 2. Purchased goods from S rupees 1,000. Transaction number 3. Sales costing rupees 800 for rupees 2,000. Transaction number 4. Paid salary rupees 1,000. And closing stock as on 31st March 2013 rupees 200. So first transaction is A starts business with cash rupees 5,000. So you know it very well. On capital rupees 5,000 and in the cash column rupees 5,000. And the next transaction, purchased goods from S rupees 1,000. Purchased goods from S. It's not clearly written whether these are cash purchases or credit purchases. But in this sentence, they have mentioned the name of supplier and the name of the supplier is S. It means this is the indication that goods have been purchased on credit basis. It means goods were purchased but the money was not paid immediately. It means we promised S that we'll pay the money later on. Maybe 1 month, 2 months, 3 months, whatever it is. So in this situation, we have not lost any cash. So, but we have created one liability and the name of that liability is creditors. So, we'll write down the columns capital, creditors, cash and stock. So, there will be one item in the creditors column that is plus 1,000. No effect on cash, but we have increased the stock by rupees 1,000. So, plus 1,000 in the column of stock. So, the new equation is 5,000, creditors 1,000, cash 5,000, stock 1,000. So, in this way, we have created liability. And the next transaction, sales costing rupees 800 for rupees 2,000. It means there's a profit of rupees 1,200. So this profit of 1,200 will be added to the capital. You know, if there is any fresh capital or profit, the capital will be increased. So we have increased the capital by rupees 1,200. And on creditors, no effect. But on cash, there will be plus 2,000 because we have received cash of rupees 2,000. And stock minus 800 because we have lost the stock of rupees 800. But for that, we have got the cash of rupees 2,000. So new equation will be capital 6,200, creditors 1,000, cash 7,000, stock 200. Then paid salary rupees 1,000. It means we have lost cash. And secondly, we have paid this money to meet our expenses. Whenever there is loss or expenses, the capital will be reduced. So we'll have to reduce the capital by rupees 1,000. So in the capital column, minus 1,000. So the new amount will be 5,200. Creditors, as it is, 1,000. But cash, 7,000 minus 1,000, rupees 6,000, because we have given the cash for salary. So the new cash will be 6,000. Previously we were having 7,000 rupees. So we have paid money as salary, rupees 1,000. And the stock as it is. So the final equation is capital 5,200, creditors 1,000, cash 6,000 and stock rupees 200 as on 31st March 2013. So this is the last equation. You know, always the last equation is converted into balance sheet. You know, balance sheet is prepared in the T shape. So let's make the format of balance sheet. And at the top, please write down balance sheet as on 31st March 2013. So on capital plus liability side, capital 5,200, creditors. Creditors is a liability because this is the amount we have to pay in future. Be careful. Creditors is a short-term liability, means maybe we have to pay within 2 or 3 months. The creditors cannot give you the stock or cannot sell you the goods for years. So creditors rupees 1000 total 6200. Now come on asset side. Cash 6000 and stock rupees 200, total 6200 on both sides. If our balance sheet is going to agree, it means everything is okay. Our question is perfectly all right.